Hello, everyone. This is a quick sound check, just to make sure that everyone can hear me. We will be starting this webinar in about 5 minutes. We're just sorting out some last-minute logistics, so please stay tuned. Okay, good morning, good afternoon, evening from wherever you are. It is my great pleasure to welcome you from Abidjan, where I am based, to this webinar on the Africa Long-Term Finance website, which we are delighted to launch. I hope you're all keeping safe and well. My name is Abdulkader Ben Brahim, and I am the partnership coordinator for the Making Finance Work for Africa. I have to first begin really by saying that this launch of the Africa Long-Term Finance website would not have been possible without support from our partners. That includes the African Development Bank, the German Development Cooperation through GIZ, and FSD Africa. So this is the first of hopefully many more dissemination events to come. Some will be more targeted. And the idea really from these dissemination is, not only to announce the virtual launch of the website, but really also to encourage dialogue and debate around the issues of long-term finance. Try to talk about what we're trying to do with this initiative, and also really to get your thoughts and ideas on how we can improve it further. We know access to finance, particularly medium to long-term capital, is a common and major challenge affecting key African economies. And the magnitude of finance and investment required to meet the Sustainable Development Goals is significant, with the current estimates around 1.3 trillion, potentially rising to 19.5 trillion by 2030. So long-term finance has an important role to play to deliver on the Sustainable Development Goals in Africa. And it's also particularly important in a moment where we have to make, where the world really has to make a major structural transformation to a low carbon and inclusive economy, which will of course require major investments. In addition, of course, there was this major setback because of the COVID crisis. And so what we hope to do really through this initiative is to promote and raise awareness, and also strengthen knowledge around the intermediation of long-term finance in Africa. So the outline of today's session, I will first quickly run through some housekeeping items. We will then hear the welcome remarks, and that will follow up. We'll follow that up with a presentation on the long-term finance website and some of the key findings from the initiative so far. We'll then hear from our distinguished panel as they discuss the role of long-term finance in supporting Africa's economic growth. And then we will open the floor for Q&A. But before we begin, I wanted to run through a few housekeeping items. I will then pass it on to our speakers for their presentation. So for the housekeeping, today's session is scheduled to last about an hour and a half. To ensure the highest quality of experience, all microphones will remain muted during the entire session. Of course, we encourage you to submit your questions at any time during the presentation, and you can do so through the Q&A feature, which appears at the bottom of your screen. Simultaneous translation is available, English to French, and there is the interpretation feature, which also should appear at the bottom of your screen. The session will be streamed live on YouTube. Simply search for the Africa Long-Term Finance Initiative. The slides and recording of this presentation will be circulated to all attendees and also registrants who weren't able to be with us today. And finally, please do not forget to fill the survey that should appear really automatically after the webinar. Perhaps, just a quick background here. I don't want to take too much time on Making Finance. So all of us are, some of you may be familiar, we're a G8 initiative that's been launched back in 2007. And we're really a joint platform a unique platform for joint action, dissemination of ideas and coordination between donors and African governments in the financial sector. And we also aim to play an important role really in bringing an African voice for financial sector development in Africa. Next slide, please. So as I mentioned, my name is Abdulkader Ben Brahim, and I am the financial sector advisor for the Making Finance Work for Africa. We're pleased to have with us Lamine Dramé, who's the division manager of the Trade Finance Division at the African Development Bank. Mark Napier, who is CEO of FSD Africa. Both Lamine and Mark will give us the welcome remarks. A presentation on the website and the initiative's key findings will be given by Michael Fuchs, who's our lead consultant of the Africa Long-Term Finance Initiative, and José de Sousa, who is a financial development expert and assistant professor at the Norwegian School of Economics. And finally, we are delighted to have an excellent cast of panelists with us today. With us today will be Thorsten Beck, a director at the Florence School of Banking and Finance, Evans Osano, who is the director of capital markets at FSD Africa. We're also delighted to have Philip Abrado-Otto, who is the director of research at the Central Bank of Ghana, and Ahmed Atut, division manager at the capital markets development at the African Development Bank. And the panel will be moderated by Lisa Klinger, who is the financial systems advisor at GIZ. Welcome to you all. I would like now to give the floor to Lamine Dramé, who will give the opening remarks on behalf of Stéphane Aletambi, Director of the Financial Sector Development Department at the African Development Bank. Unfortunately, Stéphane won't be able to join us today due to other commitments. So Lamine, please, the floor is yours.
No, thank you very much, Abdulkader. Distinguished participants, partners, and dear colleagues, good afternoon. On behalf of the African Development Bank, Vice President Solomon Quino and Director Nalo Tambi, I wish to welcome you all to this virtual launch event of the Africa Long-Term Finance Initiative website. This launch is the outcome of a long-standing collaboration between the African Development Bank and our development partners, the German Development Corporation and GIZ, the UK Department for International Development through the Financial Sector Deepening Africa Program, FSD Africa, and the Making Finance Work for Africa partnership. Together with these partners, the African Development Bank launched the Africa Long-Term Finance Initiative in 2017 as part of its strategy to strengthen the availability of investment finance on the continent. The initiative, which is hosted by the AFDB, is a unique collaboration with development partners and cuts across the AFDB's financial sector, research and statistics departments, as well as its country offices. As we all know, financial inclusion is at the top of the agenda for policymakers and the donor community. And enormous progress has been made in data collection, financial innovation, and policy formulation in this area. Another important area of finance that deserves greater attention is availability of long-term finance, which relates to funding to support medium-term and long-term investments by households and governments. Long-term finance matters because it enables growth and investment in key economic sectors. It is needed to close Africa's infrastructure gap, to expand the productive capacity of firms of all sizes, and to support Africa's housing markets in view of increased urbanization and population growth. To achieve the objective of expanding and deepening long-term finance in Africa, the initiative has adopted a two-pronged approach. First, we have embarked on the process of data collection in order to better understand the gaps in the availability of long-term finance in Africa. The purpose of this data collection, which is the focus of today's webinar, is to help various stakeholders better understand the evolution and status of the long-term finance market. In parallel, we hope the data will encourage public and private sector actors to deepen their engagement in fostering market development and in removing constraints where they exist. This is particularly relevant in environments where country knowledge is limited or not very well disseminated. The second component of this initiative is to undertake country diagnostics. These studies will help identify and analyze the constraints to deepening of markets for long-term finance in particular countries, and to present policy recommendations for improvement. The outcomes of these diagnostic studies also feature on the website being shared with you today. In effect, the two project components are highly synergistic. The country diagnostics benefit from improved data coverage, and the development of the scorecard is consolidated by insights gained from the in-depth analysis carried out in the individual countries. So altogether, the purpose of the Africa Long-Term Finance Initiative is to create interest among stakeholders in Africa about the importance and urgency of deepening markets for productive investment in our continent. We very much hope today's event serves as the beginning of a more focused and intense dialogue on this topic, and sincerely look forward to your collaboration in contributing to this dialogue, both as users and contributors to this website. Once again, dear participants, partners, and colleagues, I wish to reiterate our gratitude to our partners, the German Development Corporation, GIZ, the UK Department for International Development, FSD Africa, Making Finance Work for Africa, as well as the various departments within the African Development Bank for organizing this virtual launch of the Long-Term Finance Initiative. Finally, a word of gratitude to you all, the participants, for taking the time out of your busy schedules to be with us for the next hour and a half. Now, I am extremely curious to hear your reactions to the achievements so far and how you suggest the initiative should focus its efforts going forward. I wish you all a very productive webinar. Thank you very much.
Thank you very much, Lamine. I would now like to give the floor to Mark Napier, CEO of FSD Africa.
Thank you very much, Abdulkader, and I would just like to extend my welcome to everybody on this call, and just to echo Lamine's words that it's fantastic to see such a large number of people giving time to understand where we've got to on this exercise. I wanted to first of all congratulate the implementing team, including my colleagues, for getting to this very important milestone. It has been a long collaboration, as Lamine was saying, and I think that just speaks to the complexity of what we were trying to achieve. So it required a lot of stamina and a lot of coordination, and I'm very happy that we've got to this point now. It's a very important milestone. I also wanted to thank the African Development Bank for their foresight, really, in agreeing to host this initiative. It's obviously very important that there is consistency of data collection and in order to build up these trend patterns over time. And so I think one of the things that we were very keen to try to engineer at the beginning of this is a recognition that this is a long-term program. Long-term data requires a long-term program, and so we're very fortunate in the African Development Bank for their long-term support for this program, and as the preeminent development finance institution on the continent, they're obviously the natural home for it. But nonetheless, there were decisions that needed to be made about taking this on, and I'm very grateful that they chose to do that. So thank you very, very much for your support. For FSD Africa, first of all, Lamine has done an excellent job of explaining what this initiative is all about, so I'm not going to repeat that. But for FSD Africa, the purpose here really is to build long-term finance markets. We all know that markets, particularly in finance, which are very dependent on data, need accessible data to function properly. And it's sometimes quite difficult to sort of recognize the value of data initially, and it's only with usage that you realize how valuable it is. And we will find that policymakers, regulators, investors will use this data in very different ways. And I think it's sometimes in the absence of data that you realize just how valuable data is. So our hope is that with increased accessibility, increased usage, this will become very much part of the institutional landscape, and people will go to the scoreboard and download data and use it in their everyday lives. And it will become something that we will all come to value and to want to support on an ongoing basis. We could imagine in the future a regulator thinking about introducing a new piece of legislation and simply going on to a dedicated part of this website. And I should say we don't have this functionality just yet, but you could imagine a regulator going on to their dedicated part of this portal and downloading their pre-sorted indicators, the kind of indicators they always want to download and understand, downloading that and using that in their speeches, in their internal documents, and that should be possible. Actually, it should be made into something that is accessible at the click of a button. It should be very, very simple. So there is work to do, I think, to continue to improve the accessibility of the data. And we're certainly interested to hear from people who would like to work on that. And in principle, we're supportive of helping further developments in that area. One of the things that I also wanted to emphasize was the newness of some of this data. A lot of this data is new. It's not simply an aggregation of existing data that is pulled together in one place, although that would in itself have been a very valuable contribution. A lot of the indicators that you will find on the scoreboard are new. And that's something that I think is very important to bear in mind. It's another motivation for why you might want to visit the website and get familiar with it. So just to re-emphasize that FSD Africa, which is funded by the UK government, believes very passionately in the increased availability of long-term finance on the continent. The UK government is particularly interested in increasing the availability of local currency financing. Our new mandate as FSD Africa is very much centered on capital market development. So building on the policy and regulatory infrastructure on the continent for long-term finance. And we can't do that. We can't hope to do that unless there is good quality data in the market. And so we see this long-term finance scoreboard and the diagnostics as very important building blocks in helping us understand how to support regulators and policymakers in the countries in which we operate to do their jobs more easily. And the second point I just wanted to emphasize as well was the UK's strong focus on climate finance. At the moment, climate finance fundamentally is a long-term finance proposition. And so as we all consider the very important challenges of trying to mobilize finance for mitigation and adaptation on the continent, I think we will come to see that this scoreboard has a very useful role to play in that. As I say, climate finance is fundamentally about long-term finance in the end. And so, so we're very clear that this will play a valuable role in all of that. So I'm going to pause there and pass the baton back to Abdulkader, but just to say thank you again for joining us. Thank you to all the teams. Thank you to GIZ for being a fellow traveller on this long journey, and congratulations to all concerned.
Thank you very much, Mark, and thanks also to Levine for your remarks and really for opening this session and giving putting it into context, really. I think now it's time to move to the presentation segment of this session. So I'd like to welcome Michael Fuchs and José de Sousa to give us a presentation on the website, as well as some of the key findings of the initiative. Michael and José, the floor is yours.
Yes, thank you very much, Abdul and Mark for and the introduction from the African Development Bank as well. Can we show? Are we showing the slides now?
I was just going to ask you to stop sharing this one so that I can share ours. Thank you.
So I'm going to share this presentation with Jose, and we'd start off anyway. So we have in the long-term finance initiative, we've launched we're launching this website today. And quickly, just on the first slide here, we have a description of the various aspects of the website, which are not surprising, so to speak. There's a section about us. There's a section on what we call the long-term finance scoreboard, which is the database we're talking about. And there also are the country diagnostics. These have been undertaken in 3 countries just now. There's only one of them on the website, but the second one is to follow quite shortly. And there's a media section as well. So it has a kind of traditional format to any website. The first aspect, which we've been speaking about a bit already, are these country diagnostics. The idea here is to provide in-depth analysis of long-term finance, issues related to long-term finance in particular countries. And we started off with Côte d'Ivoire, and we are continuing, as I say, in other countries. The focus here is on 3 sectors in these country diagnostics. They've been focusing on SME finance, housing finance, and infrastructure finance, because this is where most of the long-term finance goes. They are designed, these diagnostics are designed to build on dialogue with the private sector, with private sector stakeholders, as this is really where the initiative for creating more depth in long-term finance lies. Without the private sector, there will be no such markets. And as I say, these have been done in 3 countries, in Côte d'Ivoire, Ghana, and Ethiopia. And only the first of these is actually on the website today, but the others will follow soon. There is a very broad-based, comprehensive analytical framework behind what we're trying to achieve. And this figure summarizes that framework. It's also to be found on the website, of course. We go from where the capital originates to the intermediation process, the instruments used for intermediating that capital, to the end users of that capital. And at the bottom of the figure, we have the important enabling environment which supports all those actors, so to speak, in the financial system. This analytical framework is kind of replicated in the way the scoreboard is designed. So you see here again the sources, the depth, the uses, and the enabling environment in a similar way to the previous framework. I think, yes. Then I want just to say a few words about data collection, not very much here because we haven't time for that. But as Mark was saying, this is not just the data from international databases, even though it is also that. And assembling those in one place is an achievement in itself, but there is a contribution here, a very important contribution, coming from surveys undertaken by the Statistics Department of the African Development Bank with the collaboration of country coordinators throughout central banks in Africa. This has been done twice already. And as you can see from the slide on the left-hand side, we've been using both external sources and these long-term finance surveys to establish the scoreboard. There is a report on exactly where we stand on the website today. So if you're interested in learning more, then please do look at the report we have produced already. Now we've identified a number of main challenges. They cannot be, they're not supposed to surprise you. We've identified the size of key funding gaps in the sectors I mentioned. The need for deepening of domestic markets, as Mark also spoke about, and reducing in that context the over-reliance of financial systems in Africa on banks. And hand in hand with that goes also reducing, if you like, the amount of the funding created on financial markets in African countries, which is actually used by the government, so as to make more available to the private sector. And finally, there's a large amount of the work really depends on strengthening the enabling environment and institutional infrastructure, which supports these financial markets, which is a long-term agenda. And as this is long-term finance, maybe that's not so surprising, but it's a long-term agenda for all parts of the financial systems in Africa, and obviously needs to be pursued by us all as we go forward. Next slide. Thank you, Jose.
Yeah, so now I will take over from Michael for a bit, just to give you an overview of what the website looks like and the scoreboard in the website, and also to give you an overview of how these findings of ours come to be. So once you open the scoreboard website, you will land on this page. This is the LTF scoreboard. When we started creating this scoreboard, we wanted to have a figure that would, as quickly as possible, summarize what the data looks like for each of the countries. And so we created the LTF scoreboard radar, which contains indicators from each of the 4 categories that Michael was explaining before: the sources of finance, the depth, the uses, and underlying all this, the enabling environment. We've chosen 3 indicators for each of these categories, and we created a sort of spider graph by standardizing these indicators to a common scale, so that we could compare across different types of indicators how Africa in general and countries specifically were doing. So what you're seeing right here is the radar for Africa as a whole. The scaling method we used here on this figure is the min-max method. So each score is going to be dependent on the minimum and the maximum observed for each indicator. And with this website, what you could do is very quickly select a comparative country or region. And if you do that, for example, by clicking on Kenya, you will get the radar for Kenya as well on top of the one for Africa. And you can start comparing how on each of these indicators Kenya scores compared to the African average. You can choose up to 3 different countries or regions. You can also choose different scaling methods. I'm not going to talk about that now, but we have 3 different ways of scaling these indicators so that they fit in this graph. There's an explanation right there on the top right corner of the scoreboard, where you can select a different method and also see an explanation for each of the methods. Each of them has its own advantages and disadvantages. Once you hover over all the different categories, you can also get a definition of each of these categories, and you can also click on each indicator specifically, and you'll get more data on that specific indicator. So what we're going to do is we're going to go a little bit through the report that we're writing right now. This report will be available soon on the website as well, and the structure of the report is pretty much these categories that we've been discussing. We start with the uses of long-term finance, and in the report we go through the infrastructure, housing, and SME finance. For this presentation, we're going to skip housing for the interest of time. We're going to be presenting some of the key findings on these uses of LTF. Then we'll move to sources, and then we'll also talk about depth and depth. Once we're doing this, we will already be discussing a lot of the enabling environment issues that we encounter. For each of the categories, you can, of course, assess data through the website. The left menu allows you to navigate through these categories. Once you start dropping down the menus, you'll get more specific into the indicators. And then you'll find for each category also some predetermined graphs. You can also select your own indicators and start downloading the data. You can change the comparative countries and regions on the top of the menu. You can also change the time frame. Right now we have data for the 2013-2019 period. And please don't forget to update data once you select a new country or a new time frame. So this specific graph is already showing us some info on investment and infrastructure. We're using investment as a percentage of GDP and the infrastructure index from the African Development Bank. And you can start comparing, in this case, Kenya and Uganda, and seeing how investment results or not in a higher infrastructure index. So in this case, we can see clearly that Uganda is investing as a percentage of GDP slightly more than Kenya. In terms of results, the infrastructure index is actually lower. There are other ways of comparing countries. Right here, we're just doing a comparison in terms of percentage of GDP. I'm going to talk a little bit later about another tool we have to make these comparisons more appropriate or more well-defined. But before I do that, I will hand over again to Michael, who's going to talk about the findings that we included in the report about infrastructure finance.
Yes, thank you. Just on one question which popped up just now, as Jose said, this is data up to 2019, and we are indeed preparing another survey round, and we will plan to update the data on an annual basis. So this survey round we're now planning to do will include data in 2020. And we will also be reviewing, of course, the nature and structure of the survey so we can incorporate findings and comments we receive from people like yourselves. On the infrastructure finance, the government, again, is the main, the government and multilateral and bilateral donors are the main source of such finance today. One of the key challenges facing us is to trying to get the domestic market to play a bigger role in financing infrastructure. Public-private partnerships are an important part of this, and again, the finding we have there is that the implementation capacity is quite weak, and as in many cases, the supporting legal and regulatory framework for such PPPs. Reliance on foreign borrowing is a very double-edged sword. It is fickle, it is volatile, and it entails foreign exchange risk, which needs to be absorbed somehow by these infrastructure projects, by those paying for those projects, and can be a major hindrance, actually, to development of infrastructure in Africa. We developed in context on the left-hand side these funding escalators, which you will find in the report on Côte d'Ivoire, which I mentioned earlier, and which kind of are identifying some of the philosophy behind the approach that we've taken, which is that you can't run before you can walk. And so these things take time, as we've been emphasizing, and moving from one state where government is largely financing infrastructure to another state where capital markets in Africa are largely financing the same infrastructure is a gradual and slow process and needs support along the way. We place there, of course, capital markets will play a role eventually. They're not playing much of a role in many countries in Africa as it is today. And the secret is, how do we get from one stage to another? And it does depend very much on strengthening also the institutional independence and governance of infrastructure service providers in being the main drivers of this change process. Next slide then. Enterprise finance is another major focus area for us. SMEs, though they may not be looking for long-term finance in the same way as infrastructure projects do, they are very constrained by being having to rely largely on what is today working capital finance and not finance they can use to finance for investment purposes. The larger enterprises have access to banking products, but at quite high cost. This doesn't apply to smaller and medium enterprises in the same way. The legal, financial, and business environment factors play a large role in constraining access to finance by SMEs. The vast majority of SMEs in Africa are informal enterprises and don't actually produce the kind of financial statements that are needed for access to banking services. In the same way, credit information is weak and credit histories are not usually available for many of these enterprises that are informal in particular, and they don't have collateral at their disposal. Therefore, they're severely constrained in their access to finance. Again, there is an escalator describing the stages by which we think more finance can be made available to small enterprises. Clearly, there's a more diversified approach than either bank finance or capital markets, because there've got to be other financing vehicles involved here. As I said, improvements to registering and foreclosing on collateral is very important in this space, as in establishing better credit information available to third parties to assess the reliability of SMEs as borrowers. Okay, thank you. I'll leave it back. It's now back to Jose. Is that right, Jose?
That is correct. So I'll go over the last two topics of this quick presentation. Again, this is all in a report that's going to be published very soon on the website, which is much more extensive than what we're doing here. So in terms of sources of long-term finance, again, you can find them on the website just by clicking on the category on the left menu. When you do that, you'll get an overview as you had for users of long-term finance. And in this overview, you'll be able to compare countries again. In this case, we have comprehensive graphs about the external sources of long-term finance. So on the left side for Africa, Kenya, and Uganda, we have foreign direct investment as a percentage of GDP. We have remittances inflow also as a percentage of GDP, and official development finance also scaled by GDP. And on the right-hand side, we have cross-border lending. And there you can compare again in terms of percentage of GDP, how these countries compare. This graph will show you for the largest economies in Africa, how this composition is looking. So in this case, we have also data on gross domestic savings, so more the domestic type of sources of finance. And then on the more reddish colors, we have external sources. And first of all, in terms of domestic saving rates, they're still quite moderate, around 20% of GDP across the continent. If you compare that to lower middle income countries, which is at 25%, there's still a gap there. And then I think the point that Michael also made already is that foreign borrowing, although of course very nice to have, has two main problems. One of them is that it entails foreign exchange risk, and at the moment it's difficult to hedge that risk. And the second point is that its availability is quite volatile. So we think that enhancing domestic savings so that scarce domestic resources could be deployed more efficiently is actually important. This will also circumvent this problem of potential foreign exchange risks. In terms of depth of long-term financing, the report we go over banking, capital markets, both debt and bond markets, and also private equity. We also have a chapter on institutional investors. Here, I'm going to give you a broad overview of all of these sectors, rather than going very deeply into each of them. Again, on the website, you can select depth, and I would like to show you a little bit more how, for each of these categories, the website is constructed. So right below the figures that you have on top, which give you an overview of each of the categories, like the one we saw for the sources and for the uses, you also have all specific indicators in a summary table. This summary table also gives you an indicator description, so how this data was collected and also what the data sources are. And you can also click directly on that bar in order to see the data for this specific indicator. You can also just select the specific indicators on the left menu. And as you can see right below the word LTF dimensions on the left graph, you can also just type a quick search for an indicator. Right here we have private credit for Kenya and Uganda, and what you can see is the levels that we observe for private credit as a percentage of GDP for Africa as a whole, Kenya and Uganda specifically. And you can also see some lines, and these are the type of benchmarking exercise that I told you I was going to talk about later. This is a sort of fictive number that we've created by conducting some regression analysis on using several country characteristics, so population, for example, GDP per capita. So characteristics of these countries that would kind of imply a certain value of private credit. So it's not a real number, it's a fictive number, a description of how this is done, very specific description of how this is done, can be found already on the website. What this allows us to do is to have a better comparison between, in this case, Kenya and Uganda. As you can see, Kenya has a higher private credit to GDP than Uganda. But if you look at the lines, the predicted value or the value of private credit that we thought would be achievable for Uganda, given its structural characteristics, is more or less the same as what we actually observe. So the line runs over the bars. Whereas in Kenya, actually, the level of private credit to GDP is higher than what we would actually expect, given the characteristics. What we can also see is that we could not expect, or we would not expect, given the structural characteristics of the two countries, that they would have the same amount of private credit to GDP. We would already expect Kenya to have more private credit to GDP than Uganda. The difference is even higher in reality. So we don't have this benchmarking exercise for all indicators in the website, and that's because there's not sufficient data. We're basing this analysis on a global sample of countries. And so for some of the indicators, we just don't have the data on a global level to do this exercise. In terms of depth, and without going into each of the categories separately, which you can find on the report once it's published on the website, you can see that the green color refers to banking, and you can see that the assets of the finance sector in Africa are still heavily concentrated in banking. So for most countries, this is more than 50% of all assets. When compared to capital markets, so in specific government and corporate bond markets and stock markets. That's not the case in South Africa. So when stock markets are functioning, they're actually playing a big role in the respective countries. When you look at the bond market, it's clearly dominated by government borrowing, so government debt. That those bars you can still see, and with the exception of South Africa, you will not see, even in this graph, how large the corporate bond market is, because it's just too small to be visible with the eye. So government bond market is actually dominating the bond markets, and as Michael showed in this escalator, capital market solutions related to bonds and stocks should be developed as countries develop along those escalator lines, so to speak. In the website and also in the report, you'll also find some more information about other markets. You'll see private equity as well, but it's again so small that you would not even see it in this graph. And we also attempting to get data on crowdfunding and other forms of fintech. We did decide to include something on institutional investors because we think institutional investors have quite a role to play in the development of long-term finance in Africa. They are obviously, especially pension funds and insurance companies, the more long-term sort of investors. What we see at the moment is that their assets are still very much tied to banks. And we would recommend a change in the enabling environment such that restrictions on long-term investments and also more emphasis on other alternative forms of finance could be exploited by pension and insurance companies. So this is in a nutshell what we have in the website and the report. I invite you to go through the website already to take a look at the indicators that we have, much more extensive list than we've been talking about here. You can also download all data on the top right corner of the scoreboard. There's a file there with all indicators for all countries for all years. With that, I will conclude. Thank you very much.
Great. Thank you. Thank you very much, Michael and Jose, for this comprehensive presentation. As it had been alluded before, the complexity of this initiative and the depth of the information and scope can be challenging to summarize it in a few slides, but I thought you did an excellent job. I'm sure there will be questions on either the website or the findings itself, so we might circle back to you after the panel discussion. Also, Jose mentioned that there's going to be a report that's going to be published soon on the website, and that report will contain a more comprehensive data and information on the findings of the initiative. So I would like to now call on our distinguished panelists to please turn on your microphones and your cameras. And I'd like to introduce Lisa Klinger, who will be moderating this panel. Lisa is a financial systems advisor at GIZ, and GIZ, just to say, has been really the founding partner of this initiative. So I'm glad to welcome Lisa. The floor is yours to introduce the panelists.
Thanks so much. Thank you, Abdelkader, and also thanks to all the panelists for participating in this distinguished panel and also allowing us for a discussion on the role of long-term finance for the economic development of African countries, and also reflecting on the findings that have just been nicely presented by Jose and Michael. I'm very much looking forward to our discussion. And just before I'm going to introduce all the panelists to the audience, let me just share a few logistical notes. So we will now have this dedicated discussion with the 4 panelists, which will then be followed by a Q&A session, which allows also the audience to interact and also post the questions. So please feel free to post your questions in the Q&A option that is at the bottom of your screen. And we will try to accommodate and also try to address as many comments and questions as possible. But please be aware, this is only the start of a conversation, and we will welcome you to stay tuned and continue this conversation with us. So let me introduce our panelists that are going to represent a lot of different perspectives on the role of long-term finance in African countries. So first of all, Evans Osano from FSD Africa, one of the key partners of the initiative. So he is the head of capital markets development of FSDA. across Africa. And prior to joining FSD Africa, he worked for the World Bank as head of Efficient Securities Market Institutional Development Africa. He also sits on the board and investment committee on the African Local Currency Bond Fund and chairs the donor committee of Frontclear's Technical Assistance Facility. Welcome, Evans.
Yeah, thank you very much.
And now also welcome to you, Thorsten, who's been instrumental in developing the framework that you've seen previously as part of the presentation. He is a professor of banking and finance at the Business School in London, and he's also director of the Florence School of Banking and Finance, and will take up the chair of financial stability at the European University Institute this September. He is previously working for the World Bank in the research department and worked as a consultant for various international organizations such as the European Central Bank, but also BIS and the IMF. Welcome, Thorsten.
Thanks.
And also hello to our colleague from the Central Bank of Ghana, Philippe Abradou-Otu. He is the Director of Research at the Central Bank of Ghana and also a member of the bank's Monetary Policy Committee. He has also previously worked for the IMF as economist and advisor to the IMF executive director and held different positions at the Bank of Ghana, including as a desk economist at the Monetary Policy Analysis and Financial Stability Department. He's an economist from background and holds a degree from the University of Warwick and the University of Ghana in Legon. Welcome, Philip.
Thank you.
And last but not least, welcome to our colleague Ahmed Atou from the African Development Bank, another key partner of this initiative. So Ahmed has extensive experience of 21 years working in the MENA and Sub-Saharan Africa region, structuring, leading financial sector operations, infrastructure development projects, as well as capital markets transactions. So he's heading AFDB teams in charge of developing financial markets in Africa through widening domestic financial markets, crowding in pension funds and insurance companies. So he has also previously worked at different financial institutions, including the Société Générale Bank in Egypt. Welcome, Ahmed.
Thank you, Lisa. Thank you, everyone.
So let me start with you, Evans. We've heard one of the findings is that it is key to deepen the long-term finance market and the role of domestic financial markets for long-term finance to promote economic growth in African countries. So do you agree, and what do you think is the role of domestic financial markets in the on the continent?
Yeah, no, thank you, Lisa. Let me first of all say that Africa has a huge financing gaps, and the financing gaps can be met by both domestic as well as international flows. And of course, those gaps have increased post the COVID environment. But in particular, the domestic capital markets or long-term finance markets are very important because they're going to solve two major problems. One is what Michael and Jose talked about, which is the currency mismatch. The second one, of course, is the tenor mismatch, where we say Africa is very bank dominated, and we are financing long-term assets using very short-term liabilities. So we need to try and diversify the financial sector in Africa a little bit to be able to meet that requirement. So we call those the two original sins. But having said that, we have huge needs for, I think, as I mentioned before, huge needs for finance in Africa for various priority sectors like infrastructure that Michael has talked extensively about, also housing, and also corporate financing, all that require long-term financing. And then I also say that even within the social sector, education, as well as health, we also do need long-term financing, especially where infrastructure investment is required in those sectors. And then, of course, there's also a reality in Africa in the sense that concessional funding is drying up, as we have seen. So we need to rely much more on domestic resource mobilization. That's actually an agenda of AU 2063. Very, very important about domestic resource mobilization, just because of the reality that concessional financing is becoming much more scarce. And then, of course, unfortunately, we are in an environment where we have a number of global challenges. Climate change is a big challenge for Africa in particular, and we need to find resources that can help us either to build more resilient infrastructure, enable us to adapt more to the changes of climate, or at least also contribute to reducing future carbon emissions in Africa by investing in mitigation investments. And then urbanization is another one. So that basically means because Africa is urbanizing very quickly, we need to be able to raise long-term money that can help us build climate-smart, cities that will absorb the greater number of, people that are living in Africa. And then, of course, let me say the last one, which is around the reality that we also have quite a few institutional investors increasing their assets under management. So if you look at the pension sector, and particularly because of the reforms that have taken place in Africa over the last several years, the assets under management within the pension sector is increasing very quickly. I estimate that we have now assets under management of about 420, perhaps approaching $500 billion in Africa. So if you include insurance and you include collective investment schemes, you're talking easily about over $1 trillion of assets under management. So we do have a pool of capital domestically in Africa that can start investing in the fortune of the continent as well. And when we talk about long-term finance or capital market development, sometimes there's a notion that this is all about public markets, about stock exchanges. And we are saying, no, it's also about building private markets. It's also about building private debt markets. It's also about building private equity markets in Africa and all that, because at the end of the day, we're trying to solve a financing problem. And whether that financing is coming from public markets or is coming from private markets, we should be relatively agnostic, and our policy makers should encourage at least both markets to evolve so that we can be able to solve that long problem of financing gap for African infrastructure, housing, or even for corporates in the continent. So let me perhaps stop there.
Well, thanks so much. Thank you, Evans, for outlining a lot of challenges that lie ahead, but also already giving some hints on what can be done and the role of institutional investors, especially. So let me turn to Thorsten and looking more what can be done and what are the different roles of stakeholders. So Thorsten, what do you think are the most important steps based on your research to take in closing the financing gap? And maybe you can elaborate on a couple of examples in specific sectors such as infrastructure, housing, or SMEs.
Well, thank you very much, Lisa. So let me actually maybe first start and kind of agree with Evans on what he said last. So yes, there has been, for a long time, there has been a focus in African financial systems on banks, for obvious reasons, because as Evans said, African financial systems are so bank-based, but also on stock exchanges. And yes, stock exchanges do have an important role. But I think we have to look beyond that, and we have to look for more other non-bank financial intermediaries and private markets, be it equity, be it debt, be it kind of mezzanine mixed hybrid markets, hybrid forms. And I think ultimately this takes us back to, so Evans referred to two original sins. Let me refer to two original frictions in African financial system. One is scale, and the other one is risk. Scale, most African economies, financial system just don't have the scale, for example, to sustain a very liquid, large stock exchange. And therefore, private equity might be more an answer than public stock exchanges. Number two is we also know that there are domestic resources that are waiting to be intermediated, but it's probably not sufficient. So we need a mix of domestic, foreign, and public, private, again, from both sources to really address these gaps. So I talked about scale, the other one, risk. And here, again, you can think about both demand and supply side. I mean, infrastructure, I know that Michael might have mentioned it, but just risk management skills, infrastructure, finance skills are often lacking. but also markets to hedge. Again, something that Evans pointed out, to foreign exchange. I mean, if we tap foreign capital resources, we also might need to hedge them. And I know there are some options available, such as TCX, for example, but it might be simply not sufficient. And again, I think here the mix of private players, the public sector, both on the donor side, but also local governments, is certainly important. Let me give you, since you asked for one specific example, SMEs. And by the way, I was looking at the chat and the Q&A, and there are lots of questions about very specific segments and how to address the constraints. And I think that's probably beyond the scoreboard. That's probably something that Michael pointed to, the country diagnostics, because there are lots of country-specific kind of bottlenecks. And there's not one panacea or one solution, one silver bullet that will help to resolve the problem. But so what we've learned over the years is that in terms of SME finance, competition can be helpful. Competition from within the banking system, for example, having Pan-African banks has been useful, but also having non-banks enter the space can be very useful. Information friction, credit registries, or sharing information about SMEs among creditors and allowing SMEs to build up a credit history can be useful, but also extension of collateral registry to movable assets, so kind of broaden the array of assets that can be used as collateral for credit contracts. But also, again, so these are more the institutional sides, but also kind of other government support measures. Guarantees can be useful, especially when we talk about long-term investment loans. So again, and I'm not saying there's this one policy that will definitely help. Different countries have different needs, different bottlenecks, and one would have to really look at individual countries to see what can help. Thanks.
Thank you, Torsten, and also thank you for giving an overview of the complexity of the initiative and also followingly, of course, of the recommendations, looking at different stakeholders, but also looking at the different sectors. And now that you mentioned the diagnostics that have been carried out as part of the initiative, we did conduct one diagnostic in Ghana. That's why I'm very honored to welcome Philip from the Central Bank of Ghana, who has been also supporting the country diagnostics and of course also providing essential data to be fed into the scoreboard itself. So Philip, let me turn to you. Can you reflect on the findings, maybe also potentially specifically on the findings for Ghana itself, and also tell us a little bit more on the role of the Central Bank of Ghana and what has been doing in order to promote the depth of long-term finance markets in the country?
Well, Lisa, thank you very much. Let me first begin by commending this whole initiative, and I think the work done so far has been great. And I think Ghana is also honored to have been selected as a case study because I think in the end we will benefit. In the end, we'll get to know our own situation from another perspective. I have looked at the report, and in my opinion, the study will surely be very useful to policymaking for two main reasons. First, I think it helps to gauge the stage Ghana has reached on its long-term financing development ladder, and then two, useful to guide policy actions to move the economy further on that ladder. Now, going through the report, there were several findings of the report that resonates well with me in my capacity as the head of the research department and leading a team of researchers. These issues come up all the time, and although we are not providers of financing, the issue invariably always comes to sit on our lap, and people keep asking, what is the central bank doing? What can the central bank do? Let me just share a practical example on the policy front that we experienced at a just ended MPC meeting in May 2021. And during the discussion on the banking sector, the issue of long-term financing came up. because we had realized that in the midst of the COVID, and during the surveys that we conducted by the Bank of Ghana, we did about 4 surveys in 2020, and invariably came out that all businesses were clamoring for long-term financing. So the issue was discussed at the meeting, and one of the deputy governors said, look, let's look for this LTF diagnostic report. There were issues that they said about Ghana. Let's go back and let's see how far we have done in meeting or in closing some of these gaps, and then come back to the committee with recommendations, and let's see how we can push the agenda forward. So trust me, the work is a very good work, and we are leveraging on the results for more policy actions. And what I just want to put across is that the issue just came at our last MPC meeting, and I can tell you there's work going on already in this area to try to see what we have done so far in closing some of these gaps. But the general impression I get from the findings is that I think we need to be conscious. We need a conscious, multi-sector and well-coordinated approach to develop and deepen the long-term financing market in Ghana. For example, I mean, if you look at the report talks about inadequate legal and judicial basis for contract enforcement and secured transactions, which weakens mortgage foreclosures. It increases risk premium and interest charges on mortgages because very few institutions providing mortgages are pricing them as short-term liabilities rather than looking at that long-term. The consequences has been inadequate effective demand for decent housing due to exorbitant prices. I think one other thing that I noted about the report is that the report also highlighted gaps in the capacity of local banks and entrepreneurs to develop bankable projects that can successfully attract adequate long-term financing at affordable rates. This point is very key because, again, last year, we understood that one of the main reasons why local banks, we also do survey the banks every now and then. And I think one of the issues we observed last year was that credit was at its lowest ebb. And then when we talked to all the banks said demand was not there. And the banks were also complaining that they could not find bankable projects to deal with or to take advantage of. So these are some of the reasons, and hence the need to develop local expertise capable of preparing and bringing projects to final close. So this is also an issue that we need to look at closely, and I believe that the proposal for government to facilitate the establishment of a private sector-led project development facility is once again a welcome proposal. Moreover, over the years, the government of Ghana has been pursuing policies aimed at developing the capital market, which has been talked about, through several known, although several known challenges remain, as highlighted in the report, including limited market liquidity. Our capital markets are not liquid. We have shallow corporate bond markets and narrow institutional investor base, and all these things will have to be dealt with as we move along. And I think finally, as I mentioned earlier on, Ghana is probably on step 3 of that infrastructure funding escalator ladder, and I think we need to move that up a little bit higher. Probably to step 4, step 5 in the shortest possible time if we choose the coordinated approach proposed in that report. Now, what has the Bank of Ghana been doing to improve the depth of LTF in Ghana? Well, look, one may argue that the Bank of Ghana is mainly the regulator and promoter of money market, is responsible for inflation. Apart from keeping inflation in check, we are not involved But I think there are several reasons why central banks in developing economies need to play, at least in facilitating roles in the development of long-term financing. And I think the Bank of Ghana has not been left out of this. We have played many roles. For instance, there's continuous support in terms of sponsorship and technical facilitation for the development of the LTF ecosystem in Ghana. For example, the Bank of Ghana played an important role in the establishment of the State Insurance Corporation. The Ghana Stock Exchange was spearheaded by the Bank of Ghana. We also have a collateral registry, a central securities depository that tracks instruments of bonds held by the public. The secondary market, the government of Ghana bond market, the credit referencing reporting bureaus, all these things have been championed by the central bank, and is our contribution to ensuring long-term financing in the country. Also, currently, the bank is a key technical partner in the ongoing effort to establish a development bank and a domestic rating agency. The development bank, we spearheaded and pushed through and ensured that a bill got to Parliament in the shortest possible time, which was approved. The development bank should be starting work sometime this July, and it's all part of our efforts to ensure long-term financing. The Bank of Ghana supports undertaking compilation and dissemination of important financial data. I think Napier talked about the essence of data, and it is very critical to support research and development. And I can tell you that the Bank of Ghana is at the forefront of all these things. And these are the little support that we are providing to the system. Thank you very much.
Thanks so much. Thank you, Philip. Thank you for also giving us a little bit of overview and insight on what is happening in Ghana, and also the role of the Bank of Ghana. And it is very good to hear that the country diagnostic is helpful for your daily work. And also, it is one thing to analyze and collect data. It is another thing then to actually implement what is being recommended and to discuss the recommendations. So it's very good to see and to hear. So let me move to our last but not least panelist, Ahmed, from the African Development Bank. So we've been talking about the development of capital markets, but we've also seen that the initiative goes beyond also looking at the sources of long-term finance and also banking, of course, and the role of institutional investors. Is that a framework or an approach that also the AFDB follows? And which role do you see in the regional players such as the AFDB to promote long-term finance? Thank you.
Thank you, Lisa, and thanks for having me. Let me start by reiterating that efficient, resilient, and robust domestic capital markets are a vital and core pillar for the effective mobilization of gross financing. I'm very happy to follow the discussion from our colleague from the Central Bank of Ghana, because what I'm going to present today is specifically related to what we are trying to do in our regional member countries. So we are emphasized on specifically on long-term financing for both the public and private sector is key. And today I'm not going to list the challenges that we are all facing and we are all aware of. What I'm going to do today really is to focus on where we are as the capital markets team of the African Development Bank, what we are currently doing, and I will list our main initiatives, which will give you a sense on our strategic direction going forward, working with our African capital market stakeholders, and will also give you the sense of the challenges that we are facing. So first, let me start by our mandates. Our mandate as African Development Bank is very sharp, and it is built on three main pillars. The first one is really to strengthen capital markets institutions and to create an enabling environment for financial markets growth. We are doing so by strengthening our regional member countries' capital market structures. We are supporting them in drafting the policies, regulatory frameworks, financial infrastructure, and we are also helping them to be aligned with the international best practices. Our typical clients are capital markets regulatory authorities, central banks, ministries of finance, stock exchanges, and all those who can help us in building a dynamic and integrated capital markets in Africa. Our second pillar aims at broadening capital markets participants and deepening the instruments. So we are trying to introduce new asset classes. We are trying to apply innovation from legal structures, and also we are trying to crowd in as much as possible diversified type of institutional investors for the mobilization of savings and long-term resources. The third pillar, which is not less important, is knowledge management and capacity building by promoting cross-cutting interventions and also policy dialogues for future operations. So our approach is simple in delivering on our mandates. We originate and deliver. We only actually originate and deliver transactions that are catalytic with impactful results that can strengthen African capital markets' ability to attract and mobilize long-term capital, local and foreign currency, from both local and international sources. Our typical clients, when it comes to investment opportunities, our investment transactions are insurance companies, and here I'm talking insurance and reinsurance, housing finance, and here I'm talking about mortgage finance or mortgage refinance companies. We are working with regional integration, with the stakeholders in charge of regional integrations through our technical assistance and grant funding. And definitely we are investing in different non-bank financial institutions. In doing so, we are using all the bank type of products. So we are private and public sector division or team. So we do private sector operations and public sector operations using unfunded and unfunded products and instruments within the African Development Bank. So just to give you a sense of our impacts, what our operations, if I may put it this way, are already resulting. It's an nascent division, so this division has been, or this team has been in existence for less than 5 years. But so now we are seeing measuring the impacts and measuring our development outcomes, as well as the deliverables generated by our interventions. So let me run you through different examples. So in terms of impact on our governments, we have initiated and sponsored what we call the Africa Domestic Bond Funds through the provision of seed funding. The fund is really the first African multi-jurisdiction sovereign ETF that is giving exposure to investors in different African local currency sovereign bond markets. It is the first, and it is focusing on sovereign bond funds. We have also worked with the government of Senegal, the government of Cameroon in structuring alternative capital market solutions to support them in hedging their bonds going to capital markets. In creating an enabling environment, we have worked with the government of Morocco and Tunisia in supporting them in deepening their financial systems and the modernization of the legal and regulatory framework governing the financial markets. This type of interventions has really contributed in the deepening of the government securities market and improved conditions for SMEs to access capital markets and also long-term finance. We all understand that you cannot access domestic savings or institutional investors' funds unless you have adequate long-term funding through a well-regulated and established capital markets. And that's why, knowing this, the importance of this, we at the African Development Bank, with the support of the government of Netherlands and the government of Luxembourg, who have come up with the Capital Markets Development Trust Fund, the CMDTF. It's a West African focused technical assistance fund. And it aims really at deploying impactful technical assistance to support the development of the domestic market, with a focus on promoting access to long-term funding, introduction of new asset classes, improve the regulatory and legal environments, and of course, broadening the investor base by giving them confidence that these markets are really well regulated and well structured. So through this kind of interventions, what we're trying to do, just to give you also another dimension, we're developing strategic roadmaps for debt markets development and for boosting secondary markets liquidity by shifting them from the manual to electronic trade debt securities. We're supporting them in transition from compliance-based to risk-based supervision approach. We're supporting stock exchanges in building their capacity. And when it comes to regional integration, we're also supporting the Africa Stock Exchange, we call it Africa Exchange Linkage Project, supported by the Africa Stock Exchange Association, in creating this kind of pan-African integrated stock exchange, by which stock exchanges can boost this kind of cross-listing and the flow of funds. We are also impacting on infrastructure through our operations. So we invested in the infrastructure credit guarantee company, InfraCredit of Nigeria, by which the bank support really helped in the provision of credit guarantees for long-term local currency corporate bonds that is really being used for infrastructure projects. When it comes to our impact on mortgage finance, for instance, we invested in the Kenya Mortgage Refinance Company. And this is just an example of what we're trying to do. It's not all what you're doing, it's just to give you a flavor. We invested in the Kenya Mortgage Refinance Company, by which we are helping lower middle and middle income households access to adequate mortgages from one side. And from the second side, we are introducing a new asset class by supporting this institution to access long-term local currency funding through capital markets. In terms of our impact on SMEs, we also supported the Alicia IDF funds, is the first funds in Africa to be dedicated for women-owned or led SMEs. And we're also supporting the Africa Local Currency Bond Funds that is promoting SMEs access to long-term local currency funding. So I think from our interventions, we are really following a holistic approach. We are not focusing on one dimension of the building stocks. We're not only working on the technical assistance sides or on the investment side only. Our approach is really holistic. We'll continue to do so. There will be more emphasis on new initiatives like the ones we are trying to do when it comes to SMEs, when it comes to African corporate bond, supporting African corporate bond issuers, especially those who are first-time issuers on capital markets. I think this is just an overview of what we're trying to do. And of course, we are relying on our stakeholders working in our African regional member countries. And I'm sure that the future of Africa is different, especially capital markets in Africa is different with this kind of collective and collaborative approach. Thank you, Lisa, over to you.
Thanks so much. Thank you, Ahmed, and also for answering already one question that has been posed in the chat box on what the AFDB is doing more specifically. I would like to pick one question from the audience, given that we are running short of time, looking at the role of impact investing and also for achieving the SDGs, and maybe handing over to the project team, Michael or Jose, if the role of impact investing has been measured or assessed as part of the scoreboard.
I can comment on that briefly. I think, yes, we would like to have more data on those kind of investments. We have looked at all the sources that are available, and some of that is proprietary information, which we have not been able to include, of course, and some of it is on the scoreboard itself already. There is some information on private equity investment in Africa. I think actually in that space, since that question was asked, that's one of the areas where more innovation is required actually than is happening already, and one needs to talk when we're looking at issues like how to increase the availability of finance to the SME sector, as this is largely focusing on that. Then I think that what Thorsten Beck mentioned about broadening a number of instruments that are available and can be used in Africa is very important. And there is certainly space for innovation here. One of the areas where I think more should be done in developing finance for small enterprises is in the area of subordinated debt, i.e. mezzanine finance for small enterprises. This is happening in some countries rather on an experimental basis, but there's plenty of room for expanding that kind of finance for small enterprises. It will also be a kind of instrument which the institutional investors might be more interested in investing in than pure private equity, which raises, of course, huge risks for them. And subordinated debt is a much more stable cash flow, if you like, for them, and more interesting perhaps for them to look into. Another aspect which is important here is in increasing access to finance for small enterprises, is in the whole area of factoring, which was mentioned by Jose, I believe. And in there are possibilities, for example, for undertaking even the securitization of receivables, if that kind of marketplace were more available in Africa, it would also help. There are examples of that happening in West Africa. And I think there again, there is need for innovation, and there's need for more innovation of a kind which will help develop these markets outside of the formal markets themselves is important.
Thanks so much. Thank you, Michael. And this again reflects very well to what extent also this initiative evolves and also adds on new aspects. So it's very important to us to have a conversation with all of you. And thanks again for sharing your comments, your questions, but also additional information on what you're doing. So please feel free to reach out and also ask more specific technical questions, which we are unfortunately not able to cover due to time constraints for now. But let me finish off this round of panelists with asking you one last question and asking for very short, maybe even 1 to 2 sentences response. So where would you like the initiative to move towards to in the future? So let me start with Ahmed.
Thank you, Lisa. I think the initiative is really timely, given our ongoing endeavors. I think going forward, we will rely first on the data resulted from this kind of platform. 2, we will inform our designs and our areas of intervention based on where we need more supports to promote access to long-term local currency funding. We will be able to share this kind of information also with our stakeholders for them to create informed proposals when they are approaching our institution. And this is not only for the AFDB, it's for AFDB. And again, our role is really to crowd in additional investors. So this kind of data availability, accuracy, and symmetry will really help those decision makers making very informed decisions, especially when it comes to what market to go and what market not to go. So I think it's timely. We are supporting it. We'll continue supporting it, and it is part and will be part and parcel of our business going forward. Thank you, Lisa. Over to you.
Thanks so much. Over to Philip. Where would you like to see the initiative to move to?
Well, I think looking at the initiative closely now, I think that I would like to just hammer on something that Napier said in his introductory remarks, and I think he was hammering on data. So we are on the right path, but I think we need more data to make sense of all what is going on. And I think the next phase, we need to be very aggressive with data collection so that we can all make use of the scoreboard and the kind of data that goes there. Then that will help inform policy. Thank you.
Thank you. Over to you, Thorsten.
Thanks. 4 things. So first, echoing what Philip just said, data. Data have been crucial in the financial inclusion debate. And I think good data will be crucial also in the long-term finance debate, and a regular update and an expansion of these data is really important. Number 2, this is necessary but not sufficient. So we need dissemination. These data have to enter kind of the public discourse, the more general conversation. And I'm glad, of course, to see that so many have joined this webinar today. So it's really having an informed conversation about long-term finance is critical. Third, I want to come back to the point on the country diagnostics. I think these quantitative data, most of them are really like taking a look at the picture, at the landscape from 30,000 feet. We need more grassroots kind of assessments. So the country diagnostic, I think, is a really critical complement to the scoreboard. And finally, I think we really have to look beyond the silos of different segments of financial system and focus on long-term finance as a general challenge. And I think I like to like the idea of champions of long-term finance in a country that drive the agenda, drive the debate, drive the conversation. I think can be very important, and I think has been also useful in the financial inclusion debate. Thanks.
Thank you, Thorsten. And now over to you, Evans, for some final words from the panel.
Yeah, thank you very much. So I won't repeat what my excellent panelists have said. What I'm also looking forward to is seeing this data actually changing behavior in terms of driving investments, in terms of driving policy development and all that. I'll be very happy if we're able to achieve those 2 outcomes. But let me also add to what our colleagues from African Development Bank said, Atut, that we at FSD Africa, and Mark also mentioned this at the beginning, we're also doing quite a lot to support capital market development across the continent. We have initiatives across 33 countries now, about more than 50 initiatives. And I want to just single out 3 because I saw some of them coming out in the comments. One, of course, is around the issue of climate finance, how we respond to that. And we are supporting green bond market development. And we are seeing actually pension money moving into climate investments to support different initiatives across the continent. And then the other one is around, we talked about a lot about private debt, private equity, and I'm happy to mention that we are working with a number of stakeholders in the continent, including the Africa Venture Capital Association, to develop the private equity and private debt market across the continent. And we're just hoping not just to influence policy, but also come up with innovative funding structures that can mobilize domestic capital to where it is needed. And then the last one, I think this is also very important because I've had it come across a few times, is the pension funds and what do we do with the regulations? How do we drive investments? So coverage, we know in Africa is small, so we can increase coverage, so we can increase the mobilization, but we can also direct what has been mobilized already into productive sectors of the economy. And we are quite happy that we're working with a network of pension regulators in Africa to support exactly that. And one of the things that we are looking at is the housing market. You know, in Ghana, in Nigeria, in Kenya, there's always a desire for pension sector assets or pension contributors to also access a portion of their assets or their savings towards purchasing their house. And how can that be facilitated? So those are some of the things we're looking at to support, you know, across the continent. But we just need to have a sort of a different mindset. We have to be a bit more activistic in a sense. We can't just assume that things will happen. We have to try and solve that problem, which is a disintermediation problem, which is not quite happening. And I think that's really the role of the DFIs, to make sure that the money that is available, all can be available, is actually going to where it is needed most, and perhaps even de-risking some of those investments so that that money can go where it is needed. So those are my last comments, Lisa. Thank you very much.
Thank you. Excellent. Thanks so much, Evans. Thanks to all the panelists for your excellent contributions and this very insightful discussion, and looking forward to any more discussions going forward. Thank you. Over to Ege.
Yeah, thank you.
Thank you, Lisa. And I want to also thank our distinguished panelists for your excellent contributions and really bringing to light the complex challenges and also opportunities really for long-term finance in Africa. There's a lot to digest, both from the data, the importance of data, but also on understanding the current states and the complexities of long-term finance across different sectors, the importance of taking the local country context as well, and that's what we try to do through the country diagnostics. But we will yield to that. We hopefully yield to that call from Philip from the Central Bank of Ghana about doubling our efforts on strengthening the scoreboard and the database. Because first step really is to improve transparency and really strengthen that impetus, for policy reforms in the country. And I also want to thank Lamine and Mark for your continuous support. And of course, finally, I want to thank the participants for listening in and for being also very interactive through the Q&A and the chat. It's also, I want to say one important thing also, that the data collection efforts would not have been possible without the country coordinators from the focal points at the various central banks. And it's really with their support that we're able to collect a rich set of data, covering different dimensions in long-term finance. And we hope to continue doing that in the ensuing rounds of data collection. I think we did not manage to address all your questions, but what we're going to do is we're going to circulate of course, the recording, the presentation, and also the contact details, including the link to the website I'm not sure if it's appearing there, but we will make sure that we share that with you. You'll be able to reach us, reach the whole team through that website. We also hope really to sort of, to stimulate exchanges, through a chat features and other features, and also, to strengthen dissemination and knowledge, by enhancing the content of that website and the user experience, and try to really increase awareness among policymakers in the private sector. Finally, please, I would like to remind you to please do not forget to fill in the survey right after this. This would be extremely helpful for us as we continue to disseminate this and other initiatives as well. Thank you all for your time. And until next time, goodbye and stay safe. Goodbye.
Thank you.
Okay, thank you. Bye-bye. Bye-bye.
What do we do with the unanswered questions?
Are they going to be saved somewhere?
Yeah, we're going to copy them and share them with you so that you can provide some feedback. And then we're going to email them to the respondent.
And there will also be a contact email address for the people to.
Yeah.
Right. Okay. Thank
Great.
you. Thanks so much.
Thank you.
You're welcome. All right.
Thank you. Goodbye.
Bye.